You've seen it. Haven't uploaded the entire week. It's been an amazing week. In all seriousness, it's been a crazy learning week. I want to break down all the trades we took. We took 4 trades. We went 0 and 4. 0 and 4. 0 and 4. There were 2 trades that actually should have ended up being wins, but they weren't. We ended up not breaking our rules, but we were testing out some new things we learned throughout the week, which our goal was to simply improve our win rate. We took more than 8 pages of notes, on one YouTube video in total throughout the weekend. I filled up this notebook almost. But with all that being said, let's get into it. We're gonna recap from a Wednesday because we did not take any trades prior to Wednesday. Monday, no setup. Tuesday, no setup. Going into it Wednesday. So, what happened? Let's turn this down just a little. Okay, it's fine. Hopefully it's not too loud. But whatever. I just don't want it to be completely quiet in the background. It's late, so gotta turn the vibe up. This was Wednesday. So what happened prior to Wednesday? How did we get our bearish buys for Wednesday? Tuesday we came up, swept out this 4-hour liquidity. Bam, swept all of this out. Ended up pushing to the downside. We anticipated a move actually continuing higher to see this imbalance get validated right here, this 4-hour for value gap. We did not see that validated. In turn, began to displace lower. Upon that displacement, waking up, market open. We seen that, yes, we began displacing to the downside. We were bearish. So that's how we got our bearish bias, following trend. I also did a whole strategy refinement that I will make an entire video right after this, because what I learned throughout this weekend was very eye-opening to me, and I didn't realize that I wasn't properly applying my confluences or utilizing my data in order to have my trading be data-driven and more probabilistic-driven compared to guesswork, which that's what a lot of people do. We don't want that. We don't want guesswork. We want to be able to know with probability backed by what data how our trade strategy will play out, right? So that's the premise of it. Anyways, continuing on, price action began to displace lower. This was our draw on liquidity for the day. We actually had 3, but to be honest, I didn't think we would target these. I didn't think we'd displace and absolute diddle the bed as much as we did. So, we had that 4-hour imbalance, which is right here. On the hourly time frame, I wanted to see whether or not we would validate the hourly imbalance right. Where was it? Sorry. I wanted to see whether or not we would validate the 4-hour imbalance, continuing, changing structure, changing character back to the upside on the hourly. We did not. So then what happened? Well, continue to have our bearish bias once market opened. What did it do? Retraced right here back up into this 15-minute imbalance, which would have been an amazing trade entry, but I don't typically execute right upon market open. This was literally right upon market open. If I could go to the minute, and we'll recap all of this right here, but yeah, that was right upon market open. Came up, retraced into it, consolidated, chop, chop, chop. Formed equal highs. This was stupid, and I recapped this in my TradeZilla. This was very foolish of me, but sometimes you have to make the foolish mistakes to fully understand what to never do again. I knew the equal highs was a draw on liquidity before we continue lower. However, upon displacing to the downside with strength, I figured, you know what? We're not going to make that retracement and sweep out those highs. Guess what we did? Exactly that. We got swept out. Literally wicked out. Price liquidated the bed, hit all of our draws on liquidity as we deserve it. We, instead of playing within our probabilities, we decided to, well, not play within our probabilities. So, and that happens when you what? Don't follow your data-driven rules. Follow your data-driven rules. Always keep your stop loss above the most validating point. These highs were not validating. This high was. My stop loss should have been up here, but it wasn't, because I wanted an increased risk reward. And you'll see that mistake throughout the week, because recently I've been so focused on having an increased risk reward, and that causes me to take less probable trades that are outside of my data-driven analytics. This entire week and the entire upcoming weeks will all be focused on only taking data-driven trades. That's it. Only data-driven trades, nothing else besides that. So, I don't feel like listening to this. After that happened, we look to see price action retrace into the equilibrium of this fair value gap. We've seen that, came up, slipped out highs. Now, this was something else. Upon sweeping out these highs, we displaced lower again, showcasing an amazing trade entry. But guess what? Lonnie put all of his risk on the day into one trade idea. So instead of splitting it, 500. Instead of splitting it 500, 500, we just went all in with $1,000 of risk into this trade. That's what happens when you don't split your risk. Price action showcased a perfect setup to the downside, the exact setup we wanted to see, and we realized the mistake we had here. The mistake we had here, guess what? We actually never got a liquidity sweep with a market structure shift and strong displacement. Well, we got the market structure shift and got the displacement, but we never got the sweep, if you didn't catch that. We never took out specific high. Instead, this market open retracement was the specific high that we wanted to take out. So, that was definitely something we actually didn't even realize until Friday. So Friday we figured that out and was like, okay, well, it took a minute to learn, because I thought by executing on the displacement and the market structure shift, that meant a liquidity sweep had happened prior. That's not the case. Liquidity sweep has to happen, and it has to be a prominent liquidity sweep that we don't have to go in and be Chinese for. Where was the liquidity sweep? I have to zoom in on the chart. No. You should be able to be a regular Caucasian male with your eyes open like this. What race has the biggest eyes? One day this clip will be looked back upon when we have millions of subscribers, and people will be like, was he racist? Yes. Yes, my sweetheart. To everybody. To every single individual, I am. I just want to let you know. Some people on the internet are too afraid to say it, but I'm not. I really hope this video never blows up, because this will get clipped out of context. And whatever. Anyway, price action showcased a beautiful setup before continuing to the downside. Tracement into this fair value gap. By the way, this persona is all satire. Fully satire. I do not act like this or talk like this outside of these videos. Not true. I'm just like this. I'm worse off camera. Hit our first draw and then absolutely liquidated the bed. That was Wednesday. We're 9 minutes into this, but who cares? Then what? Well, my beloveds, let's go to Thursday. Yippee. So Wednesday we learned our liquidity sweep and stop loss, which was the most basic thing. I don't know how we didn't. I really don't know. That should have been absolute common sense. Thursday was a really headache of a trading day, but let's get into it. After price action's absolute liquidation, this is like celebration. I'm about to turn up. I gotta switch it. All of the lights, it's too good. Actually, shooting stars, all of the lights, all of the lights. These recaps are so different with music, aren't they? So different. So price action came down, swept out all of this daily liquidity. All of these are daily draws, by the way. Did we make a daily retracement? No, but we swept everything out. Price action pushed back to the upside. This part I learned from TJR. Well, yeah, I actually learned from TJR for once. Thank you, Tyler. You'll never watch this video. But thanks, because I didn't know what new day opening gaps were. And I wasn't about to watch a 3-hour ICT 2023 mentorship. I've never watched a single ICT video. I'm not saying I never will, because I probably will. And if you guys don't want to learn ICT concepts because you just don't want to watch the duration of an ICT video, you are a loser. You're a loser. Get up, stop being lazy, get your notebook, baby boy, and take notes. I say baby boy because 0% of my audience is female. And if you are, we accept you. You know, thank you for coming out the closet. I know it's difficult sometimes, but my people will maybe accept you. Probably not. Price action ended up retracing for this 4-hour bearish imbalance. I was bearish, obviously, because of this absolute huge diddle stick to the downside. So in terms, what did my mind go? Oh my gosh, strong displacement. We're going to continue lower. However, I did see the possible bullish confluence, and that's why trading is a game of probabilities. You know, you have your scale, and you weigh each probability against one another. So let's say this is sells, buys. Sells and buys. It's simply about a game of weighing out the probabilities and seeing, okay, which one is more within your favor. I learned this from Tom Trades. Amazing trader. He said this: your trade could have the best confluences, best setup, best everything. You can have the most probabilities within your favor and still lose the trade, and that's okay. You're unsure about one trade, you're unsure about 2 trades, you may be unsure about 5 trades, but guess what you are sure of? 100 trades, if your data analytics showcase it, right? So, don't get so caught up on 1 loss, 2 loss, 3 loss, 5 loss, losing streak. It's not about the losing streak. It's about understanding the probability and allowing, that's why backtesting is so important, having a proper gauge on your strategy, because it helps you to overlook those times where you're not doing so good and zoom out and see the big picture. Well, okay, I know if my win rate is 60% or 70%, I may be on a losing streak right now, but in the big picture, I'm winning 70, on average 70 out of 100 trades I take, with an average risk reward of whatever, 1 to 2, 1 to 1, 1 to 3, whatever. And if you're doing 70% win rate at 1 to 3, that is insane. You're super profitable. Your profit factor is like 6. Insane. Anyways, so I was bearish here. Price action, market open, showcase a very strong displacement to the downside. Let's get some tunes going. Oh. Duh. J5 is gonna copyright me for this. I mean, I'm probably gonna get copyright for all of these. But price action displaced with strength to the downside, then ended up doing what? Well, simple, showcasing us bearish confluence. We follow within confluence of where the displacement is going and overall trend that helps us get, bias typically. So we ended up being bearish. However, we were not fully bearish on the day. Market open, we ended up coming up, at 10 a.m. Oh yeah, EST, 7 a.m. PST, 10 a.m. and then 9 a.m. CST. What did we end up doing? Price action spiked up at this 5-minute fair value gap. Now, our trading intuition immediately told us to short here. You may be like, well, why? Because we had every single confluence to set a short position. We were within discount. This was the only fair value gap above discount. That was exactly what we wanted to see. Exactly what we want to see. We learned a lot recently which fair value gaps get validated, which ones don't, which ones just get skipped upon, and whether to execute at the equilibrium of certain fair value gaps and or just a fair value gap retracement entry. This would have been one where you just simply execute at the 5-minute fair value gap entry. However, it's the equilibrium of the 1 minute, so it would have been perfect trade entry, targeting what this draw on liquidity right down here at this accumulation. But what specifically is this accumulation, Lonnie? It's the new day opening gap. For the people that don't know how to analyze the new day opening gap, let me break it down real quick. It's super simple. A lot simpler than people think. Right here. So it's literally body close, next candle open. That's all it is. And then new day weekly opening gap, whatever you want to call it. Bam. Bam, price action came down, filled it. There you go. Right, so that's what we were looking at, and we definitely seen it validated. It was very valid. You can see it right there. So our target was the bottom wick of this candlestick right here, which should have been some sort of hourly liquidity. It was an hourly retracement into this fair value gap. Price action did end up showcasing that to us. However, let's get into the actual trade position, because Lonnie, you're talking about everything else besides the trade position you actually took. I know, relax. It was shorts. Now, I manually exited this. This was one thing I told myself to never do. Never, ever manually exit the trade. Allow it to always play out. Fully hit your stop loss. This is one thing I didn't do. Price action came up, took out these highs right here upon that retracement. I wanted to see strong displacement immediately to the downside. I was so ready for the execution. I think I was about to go in with like 6 minis, or sorry, 6 micros. Or chill. 6 minis is crazy. I was about to short. Price action failed again, came back up one more time, then finally showcased that displacement, breaking structure to the downside. I was like, oh, cool, we're all good to go. Equilibrium of the fair value gap to get an increased risk reward. This was a very low risk reward trade, but the most probable I could get without actually executing on this one right here. So then what happened? Well, price action retreats all the way way back up, and did what? Validated bearish confluence. What bearish confluence? It validated the 15-minute fair value gap, but it came up, made a retracement, and in simple terms, we just made the simple retracement back up. And I thought upon the closure of that 1 minute imbalance, it was just done for. So I was like, if we displace above this, I'm manually closing. It's all good. We're done. And I didn't let my trade fully play out, so canceled it. I thought, okay, well, there you go. That was a loss right there. And I was like, okay, well, we're long now. You know, we're bullish bias. We just came out, took out this, and displaced the upside. But I failed to realize we didn't displace with strength. Bro, that's my biggest rule. We failed to displace with strength to the upside. That is when we liquidated to the downside, and at least we did this right. Executed on the bullish fair value gap in equilibrium, which was good. That was something, finally we applied something good. And then guess what? Got liquidated instantly. So there you go. Don't double bias it. Allow your trades to fully play out. So we did learn on, well, we learned this months ago, placing our stop loss always above validating highs. Didn't do that the day prior. Did do it this day, and then manually closed the trade. Now, I was within the mindset of learning. I was literally solely focused on learning, and that's all my focus has been recently. I had a talk with a friend of mine. He was like, how you get rid of the mindset of trying to pass any challenge, trying to do whatever. Forget the mindset of trying to pass fast, and forget the mindset of trying to pass slow. It's not about trying to pass fast or slow. It's understanding that you have enough where you are right now, and that doesn't mean, no. It means you have enough with your training setup. You know your data. You know what to do. So just wait. The opportunity will showcase itself. And guess what? If you lose, go in with that mindset always that you have enough. Right? And that's something that really changed. It's Saturday currently, so I learned that today. Price action ended up hitting our draw on liquidity. Cool. That was another loss. 2 meaningless losses. This one, Friday was good. But I kind of threw this last thing out the window. It's interesting because it wasn't... Yes, there were losses, and a lot of people will be like, they're losses, you're gay. You're gay. But... Sorry, that's irate. But with the actual losses, it was a process of strategy refinement. This entire week was about strategy refinement and seeing what works, what doesn't, actually getting proper data on it, and following within what our data showcases. So that's why I was so willing to experiment. And this was on the challenge accounts, by the way. They are in drawdown, about to blow 'em. But my mind's not even thinking about that, and that doesn't mean, obviously, I'm beginning to go in with a more strategic approach. But with that, all my mind was focused on was learning. And even now, it's just still focused on learning. It sounds subjective because it sounds like code. Some people are like, yeah, okay. Learning. It's trying to pass. I care less about passing at this moment because it's pointless if you pass and blow the challenge or blow the funded, right? You don't want to pass and then blow the funded. You want to mess up all in the funded stage or in the demo stage. You should be mastering this on demo before you go to funded. Don't copy me. But I like to speed it up a little bit. However, remember, blowing a challenge, even a funded account, it doesn't determine your profitability of a trader. It doesn't determine how good you are of a trader. These prop firms are made for you to fail. So it's your job to be a consistent and profitable trader and know your data analytics before you go in and just spend a bunch of money on accounts. Me. So what happened Friday? There wasn't necessarily a setup at all. Price action just rallied. You see, I wanted to see retracements for any one of these. Nothing. Nothing at all. Price action came up, took out all of our draws on the daily time frame, by the way. Here. All 4 of our draws in liquidity. And I was like, well, we're extremely overbought. We're extremely bullish. So you know what? Let's not short, let's long. And this was right after we took out this draw, but I knew the risk within this trade. So I finally split it in half. You can see how we sporadically applied everything we needed to do throughout and learn throughout the week into each trade. It just got sprinkled separately. Instead of getting dumped in a bucket on all one trade and allowing it to be a win, it got sprinkled. So don't do that. Or do that, and then with the upcoming week, learn and apply all of it to, the single trades. So right here, I knew price action had the probability to continue, or really had the probability to continue lower. If I had to make the graph of it, definitely more in favor of sells. But with the extreme bullishness, I had, and the validation of this 5-minute imbalance at that time, I was like, we can continue higher. And the 15 validation of the 5 and the 15, I was like, okay, we could possibly continue higher. This was the candle I executed on. Price action made that push up. And right as we got this displacement to the upside, bam, this was in discount. You see, we learned from the last trade. Had our trade entry within discount, stop loss below the low. What happened? Upon getting tapped in perfectly, seeing that rejection, right as we failed to see the structure change, I knew it was done. And so I was like, okay, you know what? That's that. And then there was nothing to it. It got stopped out. Price action continued to the downside. There was no bearish trade set up, unfortunately. So yeah, that was our trade recap for the weekend. Let's turn off Tupac for now. So what's our plans going into the next week? This is a long video. I know nobody's going to watch it to the end. If you watch it to the end, comment cookie. The cookie emoji or cookie. And I'll send you $2. Go buy a cookie. Well, in LA, the cookies are like $20. Crumble is insane. I've never even had crumble. Anyways, what's our plans for the next upcoming week? If you want to know everything I'm about to break down, go to the strategy refinement video that will break everything down. However, if you just want to watch till the end of this, watch the end of this. What's our upcoming plan for the next week? Nothing. It's not about passing a challenge. It's not about getting in profits. Nothing about that. All it's about is just taking data-driven trades. That's it. It's as simple as that. Taking data-driven trades. I don't care about the outcome, and I could care less about any outcome. My outcome is to see my data be applied and see where I can continue to refine my strategy. Because trading is very, very, very linear. A lot of you guys don't realize it's crazy how it works. 1 week, I was making, $200 on a payout. And then the first ever payout that really changed my life was an $8,000 payout. And that was in the same week. Like, it went from 200 to 8 bands. I was like... And it just continued higher and higher and higher. So, trading is... And this was forever ago, by the way. Trading... I'm pretty sure I have that posted somewhere. But trading works like this. It works like a graph. You don't see a result for a super, super long time. And then your first small win, once you get up to that winning stage, is super small. $200. And then your next one is like... We'll use me, for example. $8,000. And you're like, whoa. And then the next one's $12,000. And you're like, what? And this is all within the span of like 1-2 months. And you're like, how did this even happen? And all your goal was to make $10K per month, and now you made $20,000 in a month, and you're like, and then this goes to $20K, and then you're like, whoa, and then you blow all your accounts like me, and then you're like, what the heck? I went from $200 to $35K and whatever profits, and this is with funded accounts, by the way. Payouts in 2 months. That's not even like, oh my hair. It's not even feasible. You're like, what? How did? It's non-comprehensible. That's why. So, focus on mastering this stage, and then take advantage of the momentum you have here. Reinvest all this money, and bro, manage your account size, and when you begin to see big profits, reinvest that. Don't go buy stupid stuff like I did. This isn't a money reinvestment video. That's for next time. And don't go buy stupid stuff and then eventually have to return it and buy more challenges that you blow because you're scared of losing the lifestyle you had because you didn't manage your money, right? And you weren't consistent with your trading. You were just a gambler. Like I was. You could actually see that live time. You could see my decline live time. That's funny. Yeah. So, that's all for this week's trade recap. I guess each trade was around 7 minutes. That's why the video is 30 minutes. But I love you guys. Thanks for watching, and peace. Or about to record the strategy refinement video. Peace.